Man, what a roller coaster of a week in the markets. Seriously. We kicked things off with the S&P 500 hitting an all-time high. But then, bam, a complete reversal, all thanks to some big drama coming out of the Federal Reserve. And on top of that, a tech sell-off that really got people nervous. So, what on earth just happened? Let's get into it and break it all down.
Okay, before we jump in, just a quick and important reminder. This is all for educational purposes. It is not, and I repeat, not financial advice. The markets are a crazy place, so you've always got to do your own homework, all right? Let's do this.
So the week started off with this incredible wave of optimism. I mean, the S&P 500 just blasted through to a new record high. It even prompted the president to post that America is back. The feeling in the air was absolutely euphoric. But as you're about to see, that feeling did not stick around for long.
Yeah, that optimism, it was incredibly short-lived. The market slammed on the brakes and went into a full-on reverse, giving pretty much every investor a serious case of whiplash. It went from record highs to a very sharp reality check. So what could possibly cause a shift that dramatic?
Well, the catalyst, the one single thing that lit the fuse, was a huge potential shakeup at the Federal Reserve. You know, the folks who control the country's money supply. This was the piece of news that sent shockwaves through everything.
So what was it? What was this big piece of news that just completely flipped the script and caused such a sudden, sharp reversal in the market?
And here it is. The news broke that President Trump was planning to nominate Kevin Warsh as the next Fed chair. Now, this might not sound like a big deal, but trust me, it is. Warsh is known for favoring pro-growth policies. Think lower interest rates, a more aggressive push to get the economy going, which would be a massive change from the Fed's current playbook.
And the market's reaction? It was instant and it was everywhere. Stocks took a nosedive because of all the uncertainty. The US dollar actually got stronger because people were anticipating these policy changes. But here's the really weird part. Gold and silver, which are usually your safe places to hide, they plunged too. It just goes to show you how much a potential change in Fed leadership can completely rattle investors.
Now, this sell-off wasn't an equal opportunity event. The tech sector, which has been the golden child leading the market for so long, got hit especially hard. For some of the biggest names out there, this was a huge reality check.
And the main culprit here was Microsoft. The tech giant came out with some disappointing earnings. And look, when a company that massive stumbles, it doesn't just fall by itself. It creates a ripple effect that pulls everyone down with it. That news dragged the entire NASDAQ down as investors suddenly got really nervous about those sky-high tech valuations.
And you don't have to take my word for it. The numbers tell the story perfectly. The NASDAQ, which is packed with all those tech stocks, fell by a full 2.5%. That's more than double the 1% drop we saw in the broader market with the S&P 500. So yeah, it's pretty clear who took the biggest punch this week.
But, and this is a big but, it wasn't all doom and gloom for tech. Far from it. If you looked a little closer, past all the panic, there was this really fascinating counter-story playing out. There was a clear silver lining emerging, and it was all happening in the world of artificial intelligence. It was a perfect case of long-term trends versus short-term jitters.
Right here is where you can see the difference between that short-term market noise and the real long-term trends. While everyone else was hitting the panic button, companies like ASML, they literally build the incredibly complex machines that make AI chips, were reporting record orders. That tells you that the biggest players are still betting huge on the future of AI.
And if you needed any more proof, look no further than this number. $2 billion. That's how much extra the AI chip king, Nvidia, announced it was investing into a company called CoreWeave, which builds AI infrastructure. That is a massive vote of confidence from the leader in the space, showing that the smart money is still flowing, even when the market is scared.
So, as the week finally came to a close, where did all of this leave investors? Well, the mood was definitely cautious. You could feel it in the air. A classic risk-off mood was starting to set in across the board.
And just so we're on the same page, a risk-off mood is exactly what it sounds like. It's when investors collectively get nervous and decide, you know what, I'm going to take fewer risks. They start selling things they see as a bit more dangerous, like stocks, and they move that money into stuff they see as safer, like good old cash or government bonds.
So, what should we be watching out for next week? Well, all eyes, and I mean all eyes, are going to be on the Federal Reserve's next policy announcement, especially after all this drama. On top of that, we've got the big U.S. jobs report coming out, which is another huge piece of data that can easily send markets flying one way or the other.
Which really brings us to the ultimate question, doesn't it? We started the week with booming confidence and record highs, and we ended it with caution and a risk-off mood. So after this insane week of whiplash, what's going to rule the market next? Will it be caution, or will confidence make a comeback?
And that is a wrap on one of the most volatile weeks we've seen in a while. Hey, if you found this explainer helpful, I'd really appreciate it if you hit that like button and subscribe to the channel. We'll be right back here next week to break down whatever the market decides to throw at us. See you then.